Ah, the lockdown years. A combination of Zoom calls, forming orderly queues with nice even gaps, which is pretty much a sport for us Brits, and, well, boredom. And what is it that we do when we're bored? Well, apparently we invest. Because when they've shut the doors to the pub and you can't be serenaded by Jess Glynn aboard a Jet 2, where does that income go? Well, the investing apps, they certainly weren't complaining. Just have a look at Robinhood's 2021 spike in revenue. And here in the UK, after really only getting going 2 or 3 years prior, two of the big name apps both crossed the million user mark around that time. Trading 212 even had to halt account openings during 2020 and couldn't keep up with demand during 21. But what was it that users were buying on these apps at the time? Granted, some users will have struck lucky and got some short-term wins, or better yet, had a sensible portfolio for the long term, but I remember plenty of stocks that grabbed huge attention, and I thought it'd be interesting to have a look at where they are now. First up, we have Affirm Holdings. This is a fintech company launched in 2012 by a co-founder of PayPal, and they went public with their IPO in January 21, allowing anybody to pick up the stock. Now, they do that buy now, pay later stuff, yeah, but they have plenty of interest and millions of users, and I suppose investors took an interest due to their fee model, which includes no late fees, and the ability for users to make some high-value purchases. But from a high in November 21 of around $168 a stock, you can now pick it up for about $35 a share. Next is TWST Bioscience. TWST is a synthetic biology or biotech company based out in San Francisco, and apparently they can write DNA on a silicon chip. Don't ask me. But from an absolutely meteoric rise of about 800% from its pre-pandemic price, all the way to about $214 a share at its high in January 21, you can now pick this up for about $43 a share. Ouch. At 3, we have Matterport, a 3D spatial mapping company that are physically based out in Sunnyvale, California, but were helping to create digital spaces in places that didn't exist. Think the metaverse. And so, of course, when they listed in 2021 on the NASDAQ, this naturally got quite a bit of hype. I remember a lot of the YouTubers talking this one up. But from a high in November 21 of around $30 a share, you can now pick this up for about $4 a share. And that's only up from the $2 a share recently due to the talks of the acquisition. Next up is Gamestop, and this has to be one of the best Wall Street tales of all time. If you're not familiar, Gamestop is essentially a video game store. It sells games and consoles, and naturally with much of this moving online and competition for online sales in that kind of area, you can see why plenty of Wall Street firms were betting against GameStop, waiting for a fall in the share price. But then some clever Redditors got together and realised that if they collectively used their purchasing power to drive up the stock price, this would force those Wall Street hedge funds to buy back the shares in what's known as a short squeeze. They were looking for the inevitable explosion in the share price, which we got in January 21, but from a high of around $120 a share, and there was plenty of volatility after that, it's now at about $15 a share. At 5, we have NIO, the Chinese car manufacturer headquartered out in Shanghai, seen as something of a rival to Tesla, and they have battery swapping as a distinct difference. With much of the hype around Tesla in those pandemic years, you can see why NIO attracted attention. After originally launching in 2014 and listing in 2018, you could pick this up for about $2 or $3 a share in the run-up to the pandemic. But as of January 21, it went on to a high of around $67 a share. Sadly, today, it's down at about $5 a share. Next up, we have Bit Digital, which is a Bitcoin mining company that saw an absolute explosion in the share price right at the end of 2020. It went from around $6 a share all the way up to a high of $33 a share practically overnight. I mean, this was like turning $1,000 into about $5,500 in the space of a few days. So you can see why it attracted some attention. But like many things in the crypto space, as it faced some challenges, some controversy, and interest waned, you can now pick this up for about $2 a share. Upstart Holdings is a Californian company. It's an AI lending platform that partners with banks and credit unions to provide consumer loans. Now, rather than just using the traditional metrics to assess creditworthiness, they also use data insights like where you went to college, what your area of study was, or your GPA, which some people might find a little intrusive, but hey, this is America, and data is king, right? So yes, they got tons of seed money and went public in 2020. After an initial climb to around $400 a share, you can now pick this up for about $25 a share.
Include Upstart, that is one.
So, well, Upstart's up about 25% just in 4 days. That's a good-looking name, very powerful, very strong earnings. These stocks are.
What do they do?
Really
I don't even know them. What do they do?
Excuse me?
What does Upstart do?
Well, I'm sorry.
What kind of company is it?
Yeah, I'm not. You're breaking up.
Back on the crypto theme, we have Argo blockchain, which became the first crypto asset company to launch on the London Stock Exchange after its IPO in 2018. And as a miner of cryptocurrency, it's not hard to see why this attracted some attention during the pandemic years. And from its high of about £282 a share in February of 21, you can now pick this up for about £11 a share.
Oh! You alright?
Then we have Richard Branson trying to take us into space with Virgin Galactic. And after entering the markets through the back door of a SPAC in 2019, I think some of the general hype around that SPAC mania may have contributed to it, but the more obvious draw is the excitement of space tourism. But it's obvious there's some big competitors in this space. It's pretty new, it's pretty high cost, and as the financial results started to come in, it appeared that it may be a while before this thing turns a profit. And after a couple of peaks around the 2021 time, getting around that $55 mark, you can now pick it up for $1. And finally, we have AMC Entertainment Holdings. Finally, a classic business, a cinema dating back to the 1920s, originating from Kansas City. So why is it in this list? Well, you can thank Reddit again for this. During the short squeeze again that they placed upon this during 2021, it absolutely rocketed the share price. It had a close of about $551 back in 21, but with everything that's happened since, you can now pick this up for about $3.
What's up, bro?
Now, for context, 2021 did perhaps see a little overheating of the markets in general. I mean, aside from people just being bored and having a little bit of spare income, central banks and governments did opt to flood the economy with cheap money. So it's no real surprise that asset prices got overinflated, and we've been dealing with the after effects ever since. But even if you bought into a global equity fund, a fund that's tracking the MSCI World Index, for example, right at the end of 2021, which is pretty much the peak there, well, right now, after going through those sideways markets of 22, 23, you'd be up about 17%. And if you look at the last 10 years or so and annualize the returns, you'd be more in the region of 12% annualized returns, which is maybe a little top end for shares in the longer term trend of what they've done over, say, 100 years. But it does give a feel for what a sensible global basket of shares has been doing over recent years. What worries me is that, let's say it's 2021 and you've never invested before, and now your friends are talking about making this quick money. So you download one of these trading apps, and in your face are these very shares that I've spoken about today. They were in the trending section, they were in the IPO launch section, the momentum, big gain sections. They were almost sort of thrust upon investors as, look at what's happening, look at the gains that you could be making from these shares. And that combined with YouTubers talking them up, and even when you're not on the apps, they're sending you notifications to say, come back, look at these big returns, almost gamifying investing. If this was your introduction to investing and you went in with your money at that early stage and now you're sitting on these losses, well, that might be enough to have put some people off investing for good. These companies that I've mentioned in the video, I haven't highlighted them just to have a laugh about the fall in the stock price. I think it's important to demonstrate that buying individual stocks can lead to significant losses. I mean, some of these you've pretty much lost everything. So if this was your experience of investing, if this is what you went through during that sort of 21-22 period and it's put you off investing, I strongly encourage you to look at evidence-based investing. Subscribe to this channel, look at other channels similar to this on YouTube, and perhaps speak with a financial advisor if you're unsure. But the point is, there is a sensible way to invest. It involves global diversification, low costs, broadly using index funds, and getting that asset mix right so that you create a portfolio you can stick with. It's not that it's not going to go down in value during certain periods, it's just that the declines are temporary and the advance is permanent when you do this properly. I've spoken about not getting caught up in the hype of the day, and these stocks really help to highlight that. Thank you for watching. My name's Andrew. I am a practicing independent financial advisor, a chartered financial planner. If you're new to the channel, tap that subscribe button, and if you wouldn't mind pushing the like button, as it does help with that YouTube algorithm. Have you had any experience with these stocks or similar experiences with investments? Let me know down in the comments, and I look forward to seeing you for the next video.